The Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we'll cover what the expectations are for the Fed tomorrow, but we'll also go through an amazing sell-off that we had today and unpack that as well. Let's get into tonight's video. Welcome, everyone. It's going to be an interesting show tonight. We're going to cover a number of things that happened today. I thought that the sell-off that we had just kept growing on itself, and it's another one of those stampede situations that I talk about all the time. There's just so many players out there, and everybody gets leaning one side to the other, and maybe everybody got, including myself, got a little complacent coming in today. There were two things, and I would say I maybe even missed talking about it, is that this was the final day of April, the first month of Q2. And what we're seeing here is actually pretty amazing, as there was a big unwind. And so far this quarter, if we look at it, this is some interesting stats from my viewpoint anyway. S&P was down 4.2% for the month of April. NASDAQ down 4.4%. What a contrast from the first quarter, right? Everything was wonderful, great rotation. We had our database was very bullish through that first quarter. And then literally as we came into the very first day of trading, we saw the short-term database start to roll over, and I believe it was the initial sell was 4,400 symbols got sold out of our database, and then there was 3,700, and it just started peeling these off. We're down to around 18%, so we're well below some of these metrics that I'm talking about. In last night's Substack, I did mention there was a couple of numbers that I thought we could see rejections from, and the lower number of the two is right where we rejected from. I'll go through that when we go through the technicals here in just a few minutes. There's when I'm looking at my notes here and just looking what the setup was, I think it's interesting because this supposedly was all because the employment cost index came in at 1.2 instead of 1%. And I mentioned it last night. I didn't think it was even that big of a deal. Well, evidently this was the deal of the day. And because it came in a little hotter, then that just grew on itself to, okay, inflation's stickier than we thought. Everything's just started to grow. And if you look at some of the news lines that were running around today, this was the scuttlebutt on the street, was this type of dialogue. And it's interesting. I just by randomly caught, I don't know, maybe 5 to 10 minutes of Janet Yellen speaking in front of Congress today. And I got to tell you, I mean, man, I got to try to be politically correct, but this woman has no clue what planet she lives on. She said this, that on the numbers, and she was addressing this cost index, and she said the fact that that is up, that's good, because that's showing that wages are keeping up with inflation. And she said, Americans, she said these words out loud, Americans are better off than they were a year ago because of this. And yeah, you should have seen the comments. It was a live stream I was on X, and it was hilarious on what people were saying, like, where does this woman live? You know, and she was probably the only Federal Reserve chair that's ever went through an entire tenure that there wasn't any major catastrophes. How, I don't know. I guess Ben set her up pretty well, and that just kind of went on from there. But what we're seeing on this disconnect of the government, I think really what she was doing was speaking the campaign line for Joe Biden that, hey, everything's good, everybody's better, you should know that. And it was pretty hilarious. But meanwhile, the markets didn't quite see it that way. We just saw literally wave after wave of selling coming in. They just kept selling it and selling it until the point, probably the only positive thing that I can come out of with today is that we did get, and I'll go through this in a minute, STX buys on NQ, on NASDAQ, and on the ES. We definitely look like we probably rebound from these levels. And, it's interesting. Whenever I see these type of sell-offs where they just grow and continue to build like this one did today, it's always phenomenal. It doesn't matter the direction. I've been talking about this for a while, that because of, if we go back, the growth of number of investors that are in play now, there's two reasons for it. Is one was after COVID, a lot of people got centered on the markets, but we also have the fractional shares that are ability for a lot of folks to get involved, and a bunch of little fractional shares end up to be something big. So it's not just Robinhood, it's everybody, and this is a big deal. And I've been around the markets for decades now, and I have noticed for the first time in all of my years, when it comes to order flow and how the markets trade, these things it's different. And when we get into days like today, the worst thing you can do is to be a country trend trader and keep trying to pick lows, because they will just take all your money. These things just keep going, and they go until they're at an extreme. So just make sure that you pay attention when we go through the market grid where those extreme levels are, because we went right to it and actually through the STX levels, like I said, on ES and on NQ. So that was pretty interesting. But I just don't see that news being that big, but I think the nervousness of prior to the FOMC outcome for tomorrow, as well as the end of the month, it just fed off of itself. So enough about that. Let's take a look at a couple other things that I think are potentially interesting as well. We saw a pop in the 10-year back to 4.68. I thought we would come back in a little bit more, especially prior to this. But like I said, this number just got keyed on big time today. And what we see a lot, the one thing I will say about this as we come through this, we're looking at really the algos are feeding this thing as well, the trading algos. And it was very interesting day. All right, so let's talk a bit more about the Fed, and then we'll transition. And like I said, we will start to go through. We'll go through some stocks tonight. On Tuesday, I covered the stocks, and we'll do all that. I've got a green shirt on. I should have had a red one on, maybe. But anyway, my expectations for the Fed is pretty much like everyone, although I've been spouting off on my Substack and on the channel here that I believe that if the Fed's going to do anything impactful, it would be this meeting, mainly because the expectations are the only thing that we have to do tomorrow is listen to the words that Jay Powell throws at us, and that's it. There's not going to be any action, and that may be the case. Not going to be any action, but I keep spouting off that I think if they were going to do something to change sentiment, that would happen at that time. Bear with me, I have a loud vehicle going by my office. Anyway, so I still believe that there's something kind of cooking. Was there a leak? Maybe they're going to do something that is negative. I don't think so. I think this was really driven by the algos, what we saw today. But as we come into the Fed tomorrow, the expectations are zero actions and then parsing words out on the statement and listening to every word that Powell says, trying to garner something. And typically these days are pretty wild and pretty volatile. I'm actually going to be out of town tomorrow, but I will be back in time to get to the the stream tomorrow night. So there will be a stream tomorrow night, and then there also will be a stream on Thursday. Nothing on Friday this week, just to remind you. And I think that, I don't think there's any possibilities of a rate cut right now. I see somebody commenting on the line. I don't think that we should expect anything like that. I don't think they'll raise rates. I don't think they'll do anything with rates. And I keep telling you folks over and over, it's not about the front end of the curve. So let's talk about that. I appreciate that question, by the way. It's about the QT. That's the only thing that matters at the moment. Where the short-term rates are, you could drop them 0.5%, and the market sentiment might get excited, but it's going to have no good effect on the economy and the structure in the banking system. There's nothing good coming out of that. The yields staying higher, 5% plus, are going to be a good thing as we go forward. Good thing meaning good thing for the banks and how they're structured. The key element is going to be the back end of the curve. The QT is going to tell you a lot more about what the Fed's thinking right now than any rate increase or decrease. So I keep trying to get everybody to focus on some other metric, because I don't think that's important. But if we hear rhetoric, and I've been saying this going on for many months, we did, for the first time last meeting, we did hear the Fed specifically talk about the QT and that they were looking to taper the amount of sales. And that is going to be, for me, the thing to watch for, because that has more material effects in the marketplace than anything else here that they could do. My opinion, okay? And I'm not focused on yields whatsoever, because they really have normalized across the board. And so I'll leave that. And tomorrow night, what we'll talk about is whatever it is, okay? Like I said, I plan on being here. I should be back on time for tomorrow's stream. If there's anything, I'll put something out on X so you'll know if I'm going to be late, but I'm going to do it either way, because this is going to be a shortened week for me, because I have to leave. I'll be out of town for a couple of days. So that's also a warning sign, and folks should know that whenever I go out of town, something weird happens in the market. So, but I will be back tomorrow. I won't be able to even watch the markets much tomorrow. So I feel really removed at the moment, but that's the way it goes right now. So here's the plan for the rest of the show. I'll go through. I'm not going to bring up the database right now. There's really nothing there. I talked about that in the Substack last night. Pretty moderate numbers coming out of the database. We got a little traction, but we're well under 22%. And I'll tell you, the action that we're seeing here, especially after today's sell-off, and we'll see what sets up towards the end of the week, but we're going to see more attrition on our intermediate database as we go forward, because we're just going to see a lot of these trends starting to fall off, and ultimately we're going to have to refresh the whole database. And I've been setting up, if we go back 2 weeks ago, I've been telling you that the likelihood is that we're going to see a decline all the way into the end of May. This was a pretty good start at the end of the month. We'll see what kind of days we get in the next couple of days, but we should see steady declines. I don't expect any kind of collapse or rug pull or whatever you want to call it. I don't see that happening, but I do see downside. I do see trends breaking down, a lot of things happening. So let's go ahead. We'll cover the S&P. I'll go through my normal index and go through the flow, and then when we get done, we'll come back and we'll go through. I've got a few stocks I want to cover, and then we'll go to the chat line and we'll bring up some of the stocks that you folks want me to look at. So let's go ahead and get into the S&P. All right, so it was interesting, and I mentioned that we would get, let me blow this up so you can see it a little better, that we could get a rejection off the 21 period moving average. That number yesterday was me get a number for you. 5150, I believe, yeah, 5148.09. The high, 5148.50. So we went right to that level. We got big rejection. As I said, we got, if we look at the market grid for today, it'll be over on the right-hand side of your screen at the lower right hand. You'll see 5084 was the STX, and we went out at 5067. And this is a pretty drastic move, because what we've seen, if we go back for the last, we can go all the way back into early April, we've not exceeded the market grid except for one other day during this entire period. We did get down on the 25th of April. We exceeded by a little bit, but there's only been a couple penetrations. This only happens roughly about 12% of the time. And when that happens, it just tells you we're at an extreme, and you can almost see every penetration up or down starts to move back up toward in the channel that's being generated by the market grid indicator. And so we're seeing the same thing here. We got the extreme. We're at 50.58. Like I said, we went out at 50.67. We're here at 50.56. We're down 10 handles right now, so a bit of a follow through. But we're already, if we look at the market grid, we're almost at the bottom end of the grid already, and that number at the moment is 50.37. Sorry, I have to slide back and forth to get these numbers. We're at 48 low, so we're looking at 50.53 was S1, S2 is 50.37. I would suspect we hold that level. And then we've got the 10-period moving average coming through here just slightly. But let's take a look at the algos here now. And you can see we did have a projection for a down day today. I thought we would stay. I was talking about last night in Substack, and yesterday's video was talking about coming into S1, S2. I thought it would be somewhat subdued, and that's not what happened. We got all the way to the extremes, but we did stay for the most part within the volatility ranges that are being projected. And so it's pretty obvious for me as we look at how the markets are trading and look at correlate with what I was just talking about with the database. What we're looking at is the database has been in full liquidation mode on a short-term basis, and I believe that will be contagious, and we'll see more selling coming into May, and that's why I'm still looking at the end of May, maybe early June as some sort of a bottom. I don't know that sell in May and go away will work. I've been talking about probably buying the end of May. We should get some reasonable extremes. So I'm going to bring up the weekly chart here for just a second, and this is key, because this is why I don't think we're probably going to bounce back a little bit. But if we look at the 21-week moving average, right now that is at 50.29. I just mentioned 50.37 being a low. This is exactly where we're going to go. If you recall, I'm going to draw this in, and I was talking about what's the likelihood of the pattern that we're going to see unfold. And I've been talking about this little wedge shape here, this rising 21, the 10-week moving average coming down, and that we would trade within this range. I still think that's the case. I'll show you but it's likely. Also, I'm going to draw in what I believe the market grid will look like as well, so you can get a feel for that. And that will help you a little bit. So the market grid is likely to come up and start to see a collapse of volatility, and it should collapse around these moving averages here. So where this pattern is setting up, right in here, we should see a range set up where this is where the market consolidates, and this big moving average underneath here from the 40, this is a weekly chart we're looking at. This 40-week is going to be the major support. It's got a really good angle of attack. So we probably end up trading in this range. So I would expect, like I said, to see market grid kind of collapse in. We should trade along these lines, and anything anywhere near this will represent a low. This number down here, I'll show you in a second, this 40-week moving average is very similar to what we're going to get on the 200-day moving average. So if you think about the 200-day, there's 40 weeks in here. 40 weeks, there's 5 days a week roughly. That's 200. The calculations come out a little different, but this is exactly the type of pattern we're likely to see. And this pattern should flow through, as I always tell you, this should flow through the NASDAQ as well. So looking at, and this is confirmed here, and this is, I believe I mentioned this last night. I'm not sure I brought it up, but we're looking at some fib targets on the downside on a weekly as well, which is suggesting, by the way, the targets are 48.89, 47.20, and 46.15. These are the red dots down here. This 40-period moving average is coming in. If we just go out just a couple weeks, is going to come in around 47.86, 47.50 is probably a decent number. And that would take back, I haven't figured out the exact number, but that would take back the better part of about 50% of the rally we saw in Q1. And I'm not sure what kind of stimulus, what we're going to get from as we go through Q2. I'll set this up on Sunday night. I'll be going through the long-term outlook. I always do at the beginning of each month. I'll go through all the long-term charts. We'll try to set up some pattern that's likely to unfold. But if we look here right now, this 21-week moving average right now has the PPM value, which is important, is at 0.37, and that tells us that there's about a 60% probability that the market will remain above that moving average, which is the 50.29 level. So there's a pretty good possibility of us bouncing off of these levels here, but ultimately, just bringing this back in, staying in this wedge, so staying below the 10-week, which is right now 10-week is 51.73, and above the 21-week, which is the 50.29. So we should wedge in there, and we've got one of the things that is interesting, and I need to bring this up here, is that I mentioned last week that we were going to get an inside bar on the weekly, and then we should make a slightly higher high for this week and then reverse down. And if we do take out the low of last week, this will be significant. Let me put that number out there so that everybody's aware of it. But that's 5,006. So we're not far from taking that out. If we take that out, then that sets up a bit more of a negative tone, but it still confirms this triangle pattern that I'm showing you here on the moving averages. And I still believe that will be where we stay. But if things get out of hand and we start to break some of these numbers, then you could go all the way to the weekly levels, which would put us at 49.97. We've already broke through S2 weekly, so 49.97 and 49.56. All right, let's go ahead and take a look at the NASDAQ. I think I've set that up pretty good for you. NASDAQ has a little bit better configuration here as far as it goes, and I'll address, Jagan, I'll address your question here as far as the rest of the week. We should get a bounce here. I'll use the daily chart here on the NASDAQ to go through that. But this whole pattern here, what we're seeing, it's much different from the ES. I'm going to bring the ES up just for a second. So you do have that upward pattern. It's a little more volatility level on the being projected on the S&P, but we've got, for the most part, a pattern. But if we look at the market grid on the weekly, right now S1 is 17,652, and we've had a low so far this week of 17,453. So we've gotten through that level, and then the next level is right at where we are, basically 17,436, and the next level below that 17,220. So those are levels to watch, but it's very plausible that we trade within these ranges here that we're looking at. And when we look at the PPMs on the NASDAQ, they're much more stable. The S&P is suggesting a little more downside pressure, but the NASDAQ is really just kind of flat here. And we still, however, PPM1 is negative. PPM2 is actually still up at 0.31. So the markets are likely to want to stay around that 21 period moving average, which is 17,668 in here. But once again, just bringing this up on this chart, we have, this is a tighter wedge. I think that the NASDAQ, let me draw this in just to give you a contrast here. The NASDAQ is, I'm looking at the same kind of configuration here, but we should stay, this is the wedge that you want to watch here. So we should stay in this range. We're obviously violating this 21, so this is the big pattern to watch for. And when we're looking at this, let me just draw in something here. And what we're looking at is, this is most likely the ranges that you're going to be staying in, and we should see market stay here. We do have some lower fib targets, and this number's been staring at me for weeks, folks, and I haven't really pointed out, but these green dots are what is called, this comes out of the fib target, but this is a pivot level, and I'll have to wait till I take this tool off. I'll give you that exact number. But that is most likely a floor for this market, even if we do see some heavy selling coming in the next several weeks. So let's go ahead and let's go back and let's take a look at the daily, because the daily is showing that we have some, and this is the same thing on the S&P, is we do have a bit of an upward bias. But there's a but. The fact that the shape of the PPMs are up really isn't as important as the numbers. It does project that we're likely to get up a bit higher over the next couple of days, but probably what we're looking at is what I was talking about earlier. On the NASDAQ, it's similar on ES, is that we've got this little wedge. We're probably going to stay below this 21 right now, and that's going to be where I guess the bias comes in from there. I'm just going to flash over, since I'm referencing the S&P. I don't want to mislead anybody. Yeah, so it's a similar pattern here, as we probably try to trade back up into this range where what you're seeing here is that on the PPM1 is that it's turning up. It just tells us that there's probabilities for it to move back up in this range, back up towards 5,100, and then trade it within this range. We still have this PPM is still down. I'll go back to NASDAQ here. Hopefully that didn't confuse anyone. But we're still, overall, that 21 now is going to be dominant. After seeing a rejection like we saw today on both the S&P and the NASDAQ, that's very likely that's what we're going to get from there. And so let's go ahead, and I think what we'll do is we'll go to interest rates. We'll go there, and then gold got whacked today pretty big. We'll go to gold, Bitcoin, and then I'll come up and we'll do some stocks. All right, so here's a 10-year. We traded all the way back up. In fact, we may have at 4.68.6 the 4.679. So we did get a RTX sell signal. Anytime you break above and close above these numbers on the market grid, that suggests 1 to 2 days sideways. Doesn't really mean any big sell signal of any sort, but it does suggest that we go flat, and then we go to the other patterns, and we'll look at the PPMs here. But this is probably an extreme, and if you look at where this thing is capping off here, we're really looking at those levels, and let me just show you exactly where I'm talking about here. So you can look at really through these Fibonacci, but this is probably the range that we're likely to stay in. We're going to get the market just to chop inside of here. This rising 21 is going to be the bottom. That's what I was trying to target last night. It's around 4.6, extreme 4.55. So we'll probably get these things just to stay here. We should see the 10-year stay kind of in this box, and ultimately maybe this rising 24. But there's rising 40 is there. Let's take a look at the PPMs here. They're showing a really stability. We're not really trend level, but there's enough stability. This 21 is going to be a big number. So I would draw from this that I don't expect to see the market make any giant move here. Doesn't mean it won't. We've got obviously the Fed coming out tomorrow. Maybe they do something with QT. Maybe they don't. Maybe they don't see the same opportunity I do. Those are just my thoughts on things. And a lot of times I've been able to kind of look behind the curtain, if you will, and see some of the motivations. But I don't see, and I said this I recall saying this yesterday, I do not see any advantage for them to do the big rug pull and crush the markets here. I don't think that's what they're trying to do. And I think really what we're looking at is just really all the ranges, everything is set up on the indexes are set there. We're also set here as far as expectations for yields. And if you got the Substack, last week I put out the yield curve expectations. I'll update that probably next week sometime after we get the Fed, and we can start to determine what type of actions we're likely to see from that standpoint. So, all right, let's go ahead. Let's take a look at gold here. All right, I was discussing this the other day, and it does appear to me that really where we are is almost exactly like how Bitcoin is. Look at the algos here. They're projecting some pretty steep downside. If we get into this type of mode here, I don't think that won't happen until maybe the end of May. We should hold this line right here. We have not crossed the first derivative here on PPM1. PPM2 is playing with that, but we're really looking at PPM1 as being in play here, and that number is 2262. I think I mentioned these numbers on Sunday night when I covered gold last, but if we look at the market grid, we're looking at 2293, 2265, and 2240, and so we basically printed the not quite down to that 65 level, but I think this 10-period moving average will be the floor. And then if we look at just gold from this standpoint, just looking at the charts, we should continue to see support along this 10-period moving average. We would need to see the gold close up higher by Friday to turn this market grid up. But I think we may get one more week of market grid down, so there'll be a bit more of a trend. We'll wait and see that. But the algos are suggesting really that we're going to be in this big consolidation range from that standpoint. Yeah, so I just brought up Bitcoin, and yeah, somewhere around 22, I see someone talking about 22, 25, a good buy in gold. Yeah, there's still a trading range, but there's not going to be, in my opinion, any big moves out of this range for a little bit yet. There's plenty of work to be done. If you're looking for a price to buy, that's probably not terrible. So here's Bitcoin, same kind of view, and this is the pattern that I'm seeing. I've been talking about this pattern for weeks. I'm just going to bring this up. The algos are suggesting Bitcoin's probably heading through the 21-week moving average and down toward the 40. And I mentioned that that puts us down, way down at 44,000. And like I said, this may sound rude, and if you're a big fan of Bitcoin and all you talked about for the last 3 months was the halving event and how the market was going to go up, you had to know that was a wrong idea. And it's just a contrarian in me, is that not that many people can't be right. Very seldom do things work out that way. And so even though people are stacking up all this new demand, and they're talking about New Zealand's doing an ETF, who cares? There's like 12 people live in New Zealand. It's a very small country. You're not really going to get a lot of traction there. There's some other markets opening up. That's not going to kick the demand on Bitcoin. In fact, I think that the algos are suggesting some pretty drastic downside. The key level will be to watch this 21-period moving average, 54.9. We already printed, it's bouncing a bit here. We printed down to, what, 59,000, we'll just round it off. So we're seeing that, but that's within the range of what's expected as we look at the market grid. We're looking at 59,172. The low is 59,068. So we went right to that market grid number and we bounced. I've been talking about those numbers for a last time. And yeah, and Hong Kong has another one. Thanks for that. Appreciate it. Yeah, and this is exactly it, that what we're in, and I've been talking about this. This is a distribution mode going on and so I agree with the Bev 30 that's exactly what we're experiencing here in probably across the board in cryptos. This is the only one I look at, but the algos are just, a lot of times when you get these big moves up, it takes a while to work through the distribution of everything and to keep everything, I guess, the trends going. But this trend is quickly, all of a sudden, we're still positive on PPM1, which tells me there's still probabilities that we're going to bounce in this range, and we're likely to see moves up toward the 66,000, 67,000. We're still very capable of trading through that and even trading through last week's range. Last week's range was one of the more quieter ranges seen. But overall, we should continue, just like with, I'll bring this up again. Here's one of those little wedges that exist here. And I'm telling you, if you pay attention to these, you can make a lot of money trading these things. Let me just bring this up just real quick. And they pop up all the time. So right here is this wedge right here. And we're most likely going to trade in here. We're going to have to take out this 21 that I just drew the arrow through to even get down to this next level. And so when we look at this thing from a larger view, what you get is you're probably seeing some sort of trend, and all we're trying to do is figure out where's the low. Is it here? Is it here? And then we should get some kind of range. And then I think what I call the echo bounce. Once we determine where the low is, then what we'll get is basically we'll get down to the extreme, and then we'll get a bounce out of there. We'll set up a right shoulder, and that'll be a real tradable move from that standpoint. And it could happen off of this 21. We haven't even gotten there yet. Right now it's 50. We'll just call it 55,000 range. Down in there is probably a potential, but as long as this PPM 1 and this 10-period moving average is down, then that's going to be fairly tough. Okay, so let's transition here. I'm going to start with Apple, and I think we're going to do a couple things here. And Apple, I believe, is very close to potentially making a turn here. We've probably got this weekly chart, and I'm going to stick to weeklies on most of the stocks we're looking at. But this is most likely a close to a bottom. We're within 1 week or so. I talked about these fib targets that were out there before. 162 is target 2, target 3, 157, and so far we've seen what on the extreme? 164. Yeah, 164 has been it, and we bounced off of that pretty good last week. So my expectation would be here is that we're probably printed low. You can see that moving averages are these are the WaveTech moving average projections here, and I'll just bring that up full screen. You can see it's trying to set up a bottom, but once again, we'll probably get a range of 179, we'll call it 168 to 179 is where we're going to trade in. So these are great opportunities if you own the stock to do some covered rights, and if you don't own it, there's some pretty good straddle opportunities in these range because we've been locked down here. And you can see the previous, I put my cursor over here, the previous consolidation we had was at the same level. So you could actually argue, just from a pattern standpoint, is that this is what we're looking like, where we have this big move up. Let me make this a little fatter line here. So we get this move up here, and then you get some kind of ABC, and then maybe some sort of pattern that could do that. I'm not that bullish, but this would also run us out into that June period. This would be a possibility. A lot of times when we get these zigzag formations here, just drawing, this was a big numbers when we got this, and these were the huge support levels down here, and now we've got this range right here, which is most likely going to be the launch point for at least a retest up here. So we would probably get into the ranges here from that standpoint. So markets will probably do something like here. Let me fix this. Yeah, so we probably get into some sort of range in here. Whether we get a break like I'm forecasting here, we'll be able to tell that later. But for right now, this looks like a pretty decent pattern as far as expectations go. If we bring back the algos, they're also showing, there's a lot of these stocks, by the way, and the reason why I keep talking about that we're likely to see some sort of turnaround at the end of May, early June, is that a lot of these weekly charts are setting that up. I also think, depending on what type of attrition we get, I thought last week on the intermediate database, on the WaveTech database, I thought we'd see more attrition. We'd see bigger numbers. We only went from around 62 down to 60%. I'm still looking for like a 52, 48% bullish on that database, and that'll be enough to basically refresh the patterns, and that takes a number of weeks. But what we'll see is most likely, if that happens, we'll see a different leadership that comes out of the market, and Apple hasn't been one of the leaders, right? this has been a legger. So we'll start to look at some rotation from that standpoint. All right. So we got to do Tesla. I made a comment on here. I think just looking at this chart here, as Tesla's also got one of these wicked patterns. We still have this 21, this is a weekly chart that I have up. We still have this 21-week moving average. We traded up to that yesterday, and I made a comment. The real question with Tesla is, where do you short it? And it looks like maybe yesterday, you can see the algos are really kind of mixed. And my expectation here would be, just for this market, I'll draw in some of the expectations here, is when you get this type of formation, and you're really getting these stair-stepping moves. And then one thing I want to point out, I should probably at some stage, I'm always complaining the terrible Elliott wave stuff that's out there, but I want to point out something here. I'm going to change colors here so you can see this. But what's happening, each one of these waves, they're overlapping the previous wave. So what this tells you is this is corrective in nature, and probably more importantly, what it's telling you is that this here is an ABC, and this is a complex ABCX. This is probably part of a larger pattern, and then you get the echo rebound that comes up probably up into here, up towards the 200. So you could get up to 225, 250, still be in this pattern. And then maybe you start another pattern down. This low over here is, I believe, the 103 level. This was the 2023 low. And this is not a bullish pattern. I don't think that the news that was out that popped the market yesterday was necessarily a bullish pattern, because I don't think that the FSD was licensed to be for subscription in China. I don't think that's what happened. I think there's a misinterpretation going on, and Elon's going to be the last guy to fix that. But this pattern, you can even see here from the algos, ultimately, if we go out, which is pretty much not a lot of validity in, but this is based on a coefficient that's looking back 150 bars, and this is weekly. So we're talking, quite about a year and a half look back, but it's putting this algo is starting to show this kind of sideways, what I just talked about, up to the 200, and then some drifting lower again. And there's, listen, there's a big EV glut. There's a whole lot of stuff going on. I'm not an advocate of the EV. And in fact, I won't touch a subject that I think, I don't know. Listen, I know everybody's talking about autonomous driving. How many of, let's do a survey. How many of you are here would jump in this vehicle that just came out yesterday that now says it can drive you? I'm not getting in. I have a theory, folks. I could be best friends with you and you go get your pilot's license. I never fly with new pilots. I've done a lot of flying in small airplanes, but I never get in. You're going to have to show me at least maybe 300, 400 hours of flying, and then I'll fly with you. And I'm not jumping in the car. And I think the adoption of people that everybody's just going to get in. I don't think so. Maybe it's just me being an old boomer. I'm not trusting it. Maybe, it's only going to take, by the way, one person to get killed in a car that nobody's driving it, and that will just boom. Just know that's going to happen. It may not even be the fault of the autonomous driving, but I think a lot's being put on that. Maybe maybe watch too many sci-fi movies. But I think it's going to be difficult for humans to want to trust that until there's really a lot of testing done, and it's going to be gradual. It's not going to just take off. My opinion, I've been wrong before, but I don't think that's the case with this stuff. Let's see here. I'm just looking at FF, you're really funny. All right, so let's move on. Let's go to another stock here. We got to do Nvidia, right? I think this is the weekly chart. Look at the forecast that we're getting here in Nvidia. Well, also, I'll do this. Let's talk Elliott wave on Nvidia on this last move, because I've been looking at this thing, and my guess is if we haven't already, I could bring up. I don't have the program running, but we could bring up. Look at what it's doing on a weekly basis and in the WaveTech models. If we haven't sold it, we're close to selling it. But look at this forecast here. This is Nvidia. But let's do something here real quick, because I think this will be to see how I'm doing. I only got about 8 minutes, so we're not going to get to anybody's stock today, folks. Sorry. I apologize. I'm rattling on way too much. But let's go ahead and go through this. So this is the way that I would count this. This is going to be 1, 2 right here. This is going to be wave 3 without going through the intricacies. Looking at here, probably A, B, C. Here's a triangle formation. And then the only argument we have 1, 2, this could be 3, and there could be a wave 4, and then this decline over here. And ultimately, I suspect we end up back at the 200-week moving average. And that would be my forecast. We would see a low somewhere around here. There's a pivot number. I'll break this down a little bit more. Possibility of a new high. If it fails, it could be a fifth wave failure. And then we've got, let me back out some of this stuff here real quick. We've got a couple things. We have this. We've got one of those triangles here where the market is probably going to trade in, but I'm going to clean this up a little bit more, and let's just go through this. I just want to make this one wedge. This is most likely, there we go. Let's draw this in, because you want to watch for these, folks. I'm telling you, I joke all the time. I have a PhD in moving averages, but here's where the pattern's being. This is the first pattern to watch for. This 21 period moving average, it's at 728 right now. That's rising up in this pattern. So you're going to probably trade in here. This, if I'm right about this, wave 3, this is A, B, C, then maybe a rally up out of here. But we're going to follow that 21 line there. So if I back this stuff out, this little wedge is going to be the place you're going to trade. After this, then you can start to anticipate maybe some other type of configuration. But I think this is going to be key. And let's see if we can confirm this by using the PPMs here. Okay. So PPMs look like stabilization. Yeah, we're looking at the end of May. So we're likely to hover along this 21 line. If you see that, that's probably a buy the dip opportunity if you get down to that level. We bounced pretty hard last week, all the way back up to the RTX level. And now we're trading in a very narrow range so far, even though we saw some decent selling coming in today, but nothing material, because when we look at this on a weekly basis, it gets very interesting. So I'll save that for now. But the But that would be my expectations from that level. See what else I got here. Okay, somebody gets, this is your lucky day. Somebody throw out a stock here. Do we have a bot hanging around? Yeah, Starbucks. All right, John, you win. Remember the day when this was quite the company to follow? They were putting Starbucks on every corner in America and around the world, actually. Let me just see if I can blow this up so we can see what's going on. Yeah, so interesting. Let me just bring this up. So we have some fib targets down here that were sort of kind of hit. This is, once again, a weekly chart. And you see that we got fairly close down to these levels. The algos are suggesting that we're in a bottoming phase and that ultimately we'll probably come back to this 200-week moving average. As far as the configuration here, these are always, stocks are kind of hard to apply a lot of, especially when they're stocks that are, let's say they're popular, but they're not, the cash flow isn't big. The reason why Elliott and certain things do work in analysis is you need to have some nice flow to how the money flows around these things. Now, this thing's been pretty choppy, but let's do something here. Let's have fun. So one could argue that you have maybe a move up into these fib targets up here, 133. That's pretty optimistic. Here's some another islands, 109 to 122. But the algos are suggesting that we're likely to see some upward. So it looks like supposedly I saw something on X that I think it was a Simpsons projection that May 5th we're going to have a nuclear war. So, but this is yeah, exactly. They were across the street from each other. Exactly right. So, yeah. But anyway, not as terrible as I thought it might look. Algos are looking fairly good. So. Yeah, I overall like it. I don't see a lot of upside, but at least to the 200. And it looks like we're trying to stabilize here. The algos are all starting to do that stabilization pattern. All right, folks, that's going to do it from here. Appreciate it. Like I said, tomorrow I plan on being on time. I will be out. I've got to be out of town early in the morning, but I should be back in time. And we'll do Wednesday and I'm sorry. I'll have a stream tomorrow night, and then on Thursday it may be an intraday. It may be an earlier one. I'll let you know when we get together tomorrow. So anyway, thanks for talking. Yeah, I know the Simpsons reference is pretty funny, and supposedly, okay, this is that the guy that wrote the Simpsons was an ex-CIA guy. I don't know if that's true or not, but it's pretty funny. Anyway, have a great time. I love the internet. I love X. There's so many funny things on there. It's amazing. All right, folks, have a great one. Make sure you hit the like button before you leave, all right? And get the Substack too. There's free trial, kendallreport.com/newsletter. We'll get you there. 7-day trial. It's $8 a month after that. Anyway, see you tomorrow.